Hello, good afternoon, and it's always a pleasure to connect with all of you in the ICICI Prudential Mutual Funds Taraki Talks. We have already launched the ICICI Prudential ESG Fund, and probably over the next 20-25 minutes, I will be discussing more on the fund. If you have any questions, we'll be happy to answer in the call itself, or after the call, we'll be probably replying to your questions. So thank you for tuning in. If we look at the global learnings which we've had, it's been very clear that each and every citizen, each and every investor, each and every asset manager, everyone wants to do their bit to ensure that we basically leave the world a better place compared to what we have inherited. And in terms of the corporate citizenship, if you look at it, there's no better way than doing business in a manner which has environment empathy, social responsibility, and strong corporate governance. These three pillars of E, S, and G become extremely important in the overall scheme of things as far as investors are concerned. And that's where, as a corporate citizen, if a corporate is doing business with E, S, and G in mind, it becomes a beautiful concept. It's not a new concept, of course. For long, at least in Europe, if we see for the last 15 years or so, the concept of environment, social, and governance has caught up well. In fact, it's a requirement from a regulations perspective in Europe that all asset owners and asset managers have to comply with requirements relating to E, S, and G. If you look at from that perspective, ESG as a concept has definitely seen global awareness, and globally the AUMs are also increasing. And why is that happening? The very simple reason is that those who are investing money are basically investing money or wanting to invest money not only from a returns perspective, right? When we invest money, we want returns in the long run. We want to create wealth in the long run. But it is also from the fact that if we are allocating capital, the companies which are getting that capital eventually, how are they using it? Are they using it in a manner which is basically having a carbon footprint which is zero? In other words, they are not polluting the air, they are not polluting the water, or they have enough mitigants. They are taking care of the fact that they do not have water discharge outside which pollutes the environment. Because ultimately, in the long run, if I have to have a sustainable business growth as a company, I will have to ensure I take care of all the stakeholders around me. I take care of the environment around me. I take care of my own employees. I take care of the customers and the clients that I have. I take care of my suppliers. And of course, the most important aspect is I take care of everything which is related to the governance aspect, right? I have a proper board. I pay my taxes on time. I have accounts which are very, very clean. So from that aspect, any company which is doing business in a manner where the E, S, and G, which is essentially environment, social, and governance factors come into play, it becomes a superb fit from a long-term portfolio construction process. And with that thought in mind, on 21st of September, a few days back, we launched the ICICI Prudential ESG Fund. The fund is closing on 5th of October for subscription. It is an open-ended fund. And you can always invest in it even after the NFO closes, and you can do lump sum and SIP investments as well. The way to look at this fund is very simple. You are basically investing in a portfolio of stocks, right? In a portfolio of stocks which are doing business responsibly. Because they are doing business responsibly, they can showcase a more sustainable long-term growth. And if they can showcase a more sustainable long-term growth, it basically ends up being a portfolio which can give you potentially market-beating returns. Now, while returns is not the only focus of this fund, clearly it is the ESG concept, and that's what differentiates this fund from any other fund. In all the funds which generally people run, they of course focus on the governance aspect, no doubt. But the first and primary filter in normal mutual funds or in funds which are not ESG funds is the principle of valuation. So as a fund manager, if I'm running a particular fund, I would look at the valuation of the particular stock. And if the valuation and the growth metric of that particular stock fit into my overall investment thesis and the scheme's objectives, I will end up buying that particular stock in a particular proportion so as to manage the risk and reward and give long-term wealth creation. However, in the ESG fund, the first filter is the E, S, and G, which is essentially how does the company score on a composite basis as far as ESG is concerned. And that's where the growing awareness globally as well as in India is making it more and more prevalent. In fact, if you look at it, be it the company law, be it the RBI, be it the exchanges, each one of them have certain requirements from a company perspective in terms of how they should or what things they should do as far as corporate social responsibility is concerned. We know 2% of the profits are basically spent on taking care of corporate social responsibility across by corporates. There is a business responsibility reporting which has now started, wherein each corporate essentially details out how they are basically taking care of the environment in which they work, the social requirements in which they work, and that report is also available for all listed companies, at least the larger ones for sure. And from a perspective of awareness also, we see more and more awareness globally as well as in India, and that's a good thing from an investor perspective. So we truly believe that from an investor fit perspective, ESG is a differentiated concept which definitely will give you a lot of happiness also in terms of being responsible as far as your investing is concerned. Today, it is a concept which is new in India, but in Europe, it is not new. In US, it is not new. In India, it is a new concept. It is still at a nascent stage, but we believe that in 5 to 10 years' time, when the current generation was probably in school or just about in college, and they will be the ones who will be the larger investors in the markets in terms of mutual funds, they will basically come and ask for ESG funds as a simple concept, because ESG will become prevalent in India much the same way as it has become prevalent in Europe. So it's a thought which is a bit forward-looking. It's a thought which is basically looking into the future in terms of the potential growth of assets in India as well, much the same way the asset growth has happened globally in companies which are doing responsible investing. So which are the kind of companies which will not be bought on the ESG fund? If you look at the United Nations Principles of Responsible Investing, the kind of companies which are called the same companies, which is tobacco and alcohol. So there is a provision to provide for foreign securities also. Our core strategy will obviously be to, in an environment where India is probably over the next 3-5 years looking as a country with a very strong foreign exchange reserves and growth, which is going to be one of the better growth stories in terms of if we compare the rest of the world. And also the fact that growing population over the next 10 years means that there will be a rising supply of workers in India, which essentially can potentially make India as to the manufacturing hub for the rest of the world. Now, over the next 5-10 years, if that happens, there is money to be made in the markets. And if there is money to be made in the markets, those companies which are doing business in a responsible manner can actually end up gaining a larger market share as well. So ESG is not about charity. ESG, when you're investing in the ESG fund, it's not like there is any charity going on. It's not about, you compromising on returns necessarily. It's a concept which is very, very simple, be it large cap, be it mid cap, or be it a small cap fund. If they are taking care of the environment, the social and the governance requirements, they can fit into the particular ESG portfolio. As an analyst team, of course, we have scores for all the companies which we have. And we also have external research where inputs come in as far as the ESG compliance of the companies are concerned. So it's an approach which we believe will continue for the next maybe 5, 10, 15, 20 years. And versus the current lack of awareness, after 10 years, ESG will become probably a household name. And that's where if you're investing in an ESG fund today and you accumulate units over a long period of time, slowly but surely you are going to participate, which will again gain market share as the fact that if a business is doing responsibly, there is less chance of things going wrong. So the few benefits, if I can list out as far as ESG investing is concerned, the first benefit which comes to my mind is that if a company is doing business in a responsible manner, there are very low chances of any shocks like a closure notice on the company, etc., being served by the National Green Tribunal, which itself means that the portfolio will be less volatile. From a market perspective also, if you are basically doing business the right way, you're taking care of your employees well, there is less chance of any employee unrest. If you're taking care of your suppliers and your distributors well, there is less chance of any supply disruptions happening. In fact, in a difficult environment, you may end up gaining market share. So clearly, the concept of ESG, the benefits far outweigh, any of the hindrances, if I may see. And from a long-term sustainable responsible investing perspective, I do see that this concept will keep on becoming more and more popular. So from your perspective, you are getting actually a fund which is focusing on that. And I see this as a trend that today there are about probably few options available in pure ESG investing in India in the mutual fund space. You will have literally probably all our respected peer group coming out with an ESG fund because that will be the need of the hour as far as the investors are concerned. With that thought process in mind, we are launching the fund. It closes on 5th of October. We request you to have a look at the presentation, etc., and see if it fits into your overall equity allocation. So it being an equity product, it will have the risks of an equity fund for sure. But with interest rates coming down and the India growth story improving with dollar depreciation probably around the corner, there is a thought that emerging markets can actually be having a better decade than what they've had in the last 10 years. And if that is the case, allocation to equity is something which can be looked at. And if you are underweight in equities and there is scope for an equity allocation to increase, ESG fund will probably allow you. Now, because we are going to probably be investing at a time, the NFO closes on 5th of October, and around the time of the US elections, we believe that if there is volatility, we in fact will be able to get a better entry point for the buying of the NFO proceeds, and hence from a timing perspective also it suits well for those investors who are looking to invest in the market in a product which is investing in terms of the investment approach. So and from a investor experience perspective, we would want it to be a fund which over a long-term horizon, right? It is basically a fund which is fit for all kinds of investors. No matter how much money you have to invest, it is fit for you in the long run. The idea is that because these companies can have a potential higher market share gain, India grows, these companies can potentially grow faster than India because of the fact that they will have market share gains compared to their peer group because they have a more sustainable business. And if that happens, then ultimately that may translate into returns which may be index beating. So all this is essentially what we believe can potentially happen in the next 5, 10, 15 years, wherein India's growth story is intact, and within India's growth story, the leaders can actually have a higher market share. So it does fit into your equity allocation. Today, we are firm believers that value as a category, special situation as a category, and ESG is the future in that sense. It's something which is not known till now, but it will become a household name in the future. So with that thought process, we are launching the fund. Please do have a look at it. And from a market standpoint, we strongly believe that Indian markets in the long run, today, given that we are at about 80% market cap to GDP or 85% market cap to GDP, with potentially inflation coming in over the next 2, 3, 4 years, there is scope for equities to ultimately deliver. There may be volatility. It is a high volatile asset class. And that's where probably as a country, we've always allocated very little to equities. Today, if you look at our overall financial investments, we have less than 7% of our savings in equities versus a 45% in the US or the Americas. So if you see the comparison, we are very underpenetrated as far as equities is concerned. And that's where with lower interest rates and falling interest rates, there is a chance that people may want to invest in equities. And within that, we firmly believe that dynamic asset allocation, value, special situations, and ESG, along with the blue chip category, these 5, if you have in your portfolio, I think are pretty much covering everything that you need at this point of time, depending on where the market is. With that, probably I will stop, and I will be happy to take some of the questions which the investors, if you have any further questions, of course, please put it on the chat and we'll be able to answer them. I'm just looking at some of the questions which have come from a Yeah, so the first question is essentially, is it a large cap fund or is it a market cap agnostic fund? Which essentially means that can it invest in large, mid and small? Like I said, here the target is to have a fund which will have, there are companies which to reduce their footprint in terms of carbons, They are basically planted orchards which are running into hectares and hectares of land. So it is not about any specific sector, but does the company in that particular sector having taken enough mitigating steps to set up, waste processing plants, biomass plants, effluent treatment plants, etc. Having a gender diversity in terms of workmen, ensuring that the suppliers that they have do not deploy child labor. All of it is essentially taken care of when you have a high ESG scoring company. And it is something which is a fluid concept also. So ESG is not static. A company which has a lower ESG score today can actually work towards improving their ESG scores as well. So to answer your question very simply, ESG can be large, mid and small cap companies doing business in the right manner. And generally in India, because reporting standards are better in larger companies, there may be a large cap tilt because that's the nature of how the reporting standards are in India right now, wherein mid and small cap companies do not necessarily disclose everything in a very detailed manner. If a company does disclose everything in a very detailed manner on their ESG, then definitely they become a good candidate even if they are mid and small cap. The next question is, how much time will it take to deploy the full AUM as market is volatile and there is not much clarity about earnings? It's a brilliant question. Thank you for asking that question. If you look at it from a perspective of earnings cycle, we believe that over the next 2-3 years, because we've already seen a negative 24% GDP footprint. If you've seen a negative 24% GDP footprint, eventually in the next 1 year, 2 year, 3 year, when there is a bounce back, the low base would mean that on a lower base, things would look better. And in an environment where today many of the smaller producers in the medium and small enterprise segment are finding it extremely tough because of the working capital cycles being elongated, their debtor days have gone up, their demand is very poor, they may need to shut shop, right? So the supply will go off on one hand, the demand will revive after 1 year or so, or 6 months or so, we do not know exactly when. And it's the larger names, it is the more established names with probably stronger balance sheets which stand to gain in terms of market share. And within that, if there are companies which are doing business in the right manner and responsibly, they can basically have a gain which is much better than the rest. The next question is, are there external entities who assign ESG scores, and is it going to be the only criteria for investment? Thank you for that question. It's a very interesting question. Yes, there are external agencies, like I mentioned also, the service providers who provide ESG research. The most well-renowned among them globally is MSCI. Then there is Sustainalytics, which is a Morningstar company. So there are many multiple service providers as far as the ESG inputs is concerned. We have access and we have subscription to the research as well. But it is basically a task of our analyst team, which basically then, has the scoring of each company, which will be basically used from an ESG perspective. So the input from a service provider is well appreciated, but ultimately the final scoring will be dependent on our analyst belief as to whether on the criteria that they are looking at the company. The next question is, do you have the flexibility to buy other assets? So that's basically the asset allocation question. Thank you for asking that question. In terms of other assets, it being an equity fund with an ESG mandate, it is not going to buy other asset classes. It will have equity as a core asset class. There is a prevalent provision that you may have some debt portion, which basically is for liquidity management, etc. But it will be predominantly an equity allocation product. Like I had mentioned earlier, while it is focusing on India dedicated high ESG scores and the proportion of sectors, if you look at the sectoral allocations, etc. from the index, we'll try to probably have representation across sectors depending on the stocks that are available and their scores. But there is also a provision that will allow us to have those international stocks which may also have cheap valuations and high ESG scores can also be added, provide highest value to the investors in the long run. Can we time the market anytime as per perfection? The answer is no. Can we predict the markets? The answer is no. we really don't know and can't predict 2 months, 3 months, 6 months how the market is going to be. However, we stagger the fund investments so that by probably 6 months the full investment level happens. But at all points of time, we must remember that the longer you keep money in equities, the better it is from a compounding perspective. Which are the sectors which are excluded from the ESG index is the next question. Like I had mentioned, globally, in terms of the United Nations Principles of Responsible Investing, the exclusions, the explicit exclusions include sin sectors like tobacco and alcohol. So those two will probably get excluded. Of course, those companies, so within the index, if I have to see the India, in an Indian context, if there's a company with serious corporate governance issues, that can probably get excluded. So that is something which is dependent on time to time, because it can improve over time, it can deteriorate over time. There are certain factors, but thin stocks in terms of tobacco and alcohol are completely out of the ESG fund framework, and those are the sectors which are not going to be part of the portfolio. So while from an allocation perspective, the regulations allow 0 to 20% to be within any other sector and stock as well, which may be something which for other funds will be useful. But from an ESG fund perspective, we would like to keep it true to label, and hence the likelihood of anything being outside of the ESG universe in terms of the companies which are in, for example, are exclusions, being part of the ESG portfolio looks extremely extremely less likely. The next question is, will it come under the thematic category or is a product from a core portfolio allocation? That's a good question. I'll extend that question by a bit, and as to how much of an investor's portfolio can be in an ESG fund. Now, if you ask me, the first question, is this a core portfolio or is it a strategic investment or is it something which is a sectoral thematic investment? I would say this should be part of your core portfolio for the long run. Why do I say that? Because essentially when you're investing in this fund, you are not only investing in stocks which are basically doing business, but they are doing business in the right manner. So if a company is going to leave the earth a better place than what probably we inherited, it is a company which can potentially be encouraged and needs encouragement. And that will happen in the form of more and more investors getting interested in this kind of a set of companies. So it's a trend which will keep catching up, and we truly believe that from that perspective, this is a core portfolio fit from your overall portfolio perspective. And how much percentage, while the overall asset allocation, how much should be in equity, how much should be in debt, how much should be in gold, will be decided by you basis your own risk appetite, and you may take the help of an advisor as well on the same. I would say that I don't have any particular number in mind restrictive of how much money can be in ESG. If you are very comfortable, you can have as high as you want, because these are companies which essentially are doing business in the right manner. And if you're getting a set of stocks which are doing business in the right manner, it is very less likely that we will probably go wrong in terms of the long-term potential of the product. Near-term, of course, is always difficult to. And the last question, as I see it, is globally, what has been the trend and in terms of assets, in terms of performance? That's a good question, and I'll probably end this discussion with a global flavor. We did some numbers and we saw some numbers, right? And in terms of numbers, if we see, there is clearly a growth seen in the Europe and in US in terms of multiple increase in terms of trillions of dollars of assets increase in the ESG compliant funds. In 2019 calendar year alone, if we see, there has been an increase in AUM as well, which is one of the largest or the fastest increase in AUM of $154 billion globally in ESG dedicated equity, debt and hybrid category. So if you look at it from a global context, the fund flow and the investor behavior has definitely shifted towards responsible investing, towards ESG compliant investing. And that's where we believe that, in fact, there are large global, if you Google ESG and if you see the large global asset managers, they are also pretty much moving towards a framework wherein ESG becomes an important input into their decision-making process. So it is something which is a concept which is not new, and it is already caught up in the West, and both in terms of the AUM increase and in terms of the performance, the ESG portfolios, even if I ignore the performance and only look at the portfolio increase in terms of the AUM, that's been pretty strong. It essentially tells you that the investors who are investing globally, the institutional investors as well as the individual investors, they're also seeking happiness in terms of investing in a sustainable company, because I think most of us, especially with the pandemic and the way things are moving, are very, very concerned about the health of our country and the health of our continent as such. And if we see the kind of water depletion, the kind of air pollution that is there in India, it is but natural that eventually we will also move towards more and more sustainable investing as a concept, and that's where the ESG fund fits in very well. So that's about it that I had to discuss today. Thank you so much. It's always a pleasure to connect with all of you. I hope you found the information useful. Just to repeat, the NFO started on 21st of September. It is an open-ended equity fund, so it will be available for investment later as well. And the NFO closes on October 5th. The ESG concept is something which is there and will remain for the future. And to that extent, we thought that it is better to be early in terms of bringing to you something which is going to become a big future trend. Thank you for listening.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.